Welcome to the ROI Masterclass, the podcast where vision meets strategy and bold moves create measurable results. I'm Liat Siegel, interior designer and ROI strategist with 17 years of experience. I help businesses transform properties and ideas into high-performing assets. This show is specifically for real estate investors, hospitality operators, and boutique developers who aren't afraid to take risks, challenge the status quo, and demand a return on every decision they make. Each and every week, we talk with innovators and leaders across industries about the strategies and the insights and really all the unconventional thinking that turns potential into profit every single time. If you believe that smart design, decisive leadership, and strategic risk are the keys to real ROI, you're in the exact right place. Let's dive in. Today on the ROI Masterclass, we're joined by Mitch Fowler, a finance-driven strategist with experience across venture capital, private equity, corporate finance, and accounting. Mitchell has built a career on spotting opportunities, making sharp decisions, and driving real financial performance. He's now channeling that expertise into building a full business ecosystem that supports entrepreneurs end to end, from real estate and finance to marketing, wealth management, and eventually development and venture. Mitchell's vision is simple: create a powerhouse platform that helps businesses grow smarter, faster, and more profitably, which is perfect for the ROI Masterclass. Thank you so much for joining us today.
Happy to be here.
Amazing. So tell us your story, your backstory. I know you went from finance into real estate. Tell us about that journey and what brought you to what you're doing today.
Yeah, absolutely. So when I was a younger teenager, I always wanted to be an entrepreneur. I had a really wise business 101 professor in one of my first ever college classes that told me you don't really study entrepreneurship, you just kind of do it, and recommended I study something within business that I was passionate about and use that to become an entrepreneur. And I've always liked numbers. I've always felt very comfortable with, those kinds of puzzles and things like that. I'm a weird guy that likes spreadsheets and Sudoku in my spare time. And so I studied finance and then worked while I went through school. And then from pretty much age 20 to 30, I bounced around within different financial sectors between small business startups, SaaS companies, to large corporations and investment banks, and really found that my niche that I really enjoyed working with was small to medium-sized businesses. And so took that experience and partnered with a friend of mine who is a wealth manager to create Fern CFO, and he runs Fern Financial. And together we're building an ecosystem, like you said in the beginning, that is built for entrepreneurs, small to medium-sized businesses, that ideally anybody can come to us and we can help them with anything that their business needs, whether that's tax, finance, accounting, wealth management, marketing, consulting, building into, dev and IT. And then what we want to do is take that ecosystem to build a real estate portfolio and to grow a real estate business centered around alternative financing like seller financing and things like that. So yeah, that's kind of brief background, but yeah, really excited about what we're building.
What issue, what problem in the market, what challenge did you see that made you go in this direction?
I think during COVID, things got really, really skewed. Rates were low. Everyone wanted to buy, and now rates are high and people are having a hard time buying homes. I was lucky to be, young enough and have a good job to buy a home at a fairly young age. And so I kind of got into the market when it was accessible. But I have brothers-in-law. I have a sister currently that rents, and there's nothing wrong necessarily with renting, nothing like that. But I think that home ownership is a goal that a lot of people have, but it's become more unattainable. And so I think that allowing alternative financing options to people that either don't qualify through traditional banks and financing options, and to our portfolio and what we're trying to build and get into a home at an interest rate that is favorable, but also favorable terms. And that's the whole kind of concept behind the seller financing model, that we want to build essentially a preferred equity real estate fund where we find investors. And then we currently have a pipeline of interested home buyers, homes that they have found. We would take our preferred equity model, purchase the home either all in cash or part loan, part cash, and then sell it back to this buyer via seller financing. And they would pay us, and we would set it up like a traditional mortgage. And that's the difference between what we're doing from seller financing with others. Is typical seller financing deals you'll see usually have like a 5-year, maybe a 7-year balloon. And if you're not in real estate and investing, it's kind of hard to pay off that balloon payment at the end. We would love to have a traditional amortization schedule, 15, 20, 30 years. And that would also lock in returns for our investors for 15, 20, 30 years as they pay off the loan essentially, but the preferred equity fund is essentially the bank.
There are a lot of loans coming due now. Is that right?
Yeah. I mean, I think that within seller financing, loans become due and people have to pay them off if they are purchasing via seller financing. But there's also a really nice crop of baby boomers that bought homes when it was very accessible and are now owning their homes outright. The number of homes owned outright is higher than I think it's ever been. And so those are also the type of people that maybe they're looking to downsize, they're looking to retire. They don't need their bigger home that they had with their kids and grandkids, but they're looking to sell, and you can come in and purchase that home, sell it back to someone via seller financing. And so there's a nice balance of people that own their homes outright and want the cash, as well as a huge crop of people that want to get into home ownership.
What makes this model repeatable, scalable?
Yeah, at the end of the day, the saying goes, cash is king. It becomes a pretty self-sustaining model once you have raised kind of this initial equity fund of, you could probably get by with about 2.5 million, and then you buy homes, and then with the profits that you don't distribute back to investors, you find new homes to buy, and the fund essentially just buys more and more and more. As the portfolio grows, the month over month revenue increases, the net profit increases, and you turn around and you do it again and again and again. And the beauty of it is like I said, the pipeline we have of interested buyers is not small. There are a lot of people out there. And so as fast as we can find homes to buy, as fast as we can acquire cash to buy them, whether that's through investment or profit, we can put interested buyers into the homes.
So with the guaranteed returns that an investor would get over a longer term period, why would they go the other route versus now going, towards what you're doing and this route? Is there one benefit over the other?
From a returns perspective, probably not. I think that there is a level of consistency with the returns we can provide, with it being a longer term investment where we can pitch to somebody, hey, we would like to have you a part of this first fund we're raising. We can lock in returns for 20, 30 years for you consistently, month over month, quarter over quarter, year over year. But I also think that there's a huge feel good aspect to this investment, where that's something that I think I personally am passionate about. And that's why I like what we're doing here within this, we call it just the Fern family tree, the Fern ecosystem. We're helping people helping their dreams realistically to come true, whether that's a small business owner that has an idea and needs help, or that's someone that's trying to get into their first home. We're building this to help people. The whole ecosystem is all about assisting others and helping others succeed. And so I think that emotion in a positive way can play on investors, as well as just anyone that comes into being a part of what we're building, is the notion that they're helping others.
I love that. I think there's more and more real estate that's happening now from a heart-centered perspective, rather than, I like to call it the cutthroat real estate, versus now modern day real estate, where a lot of people they're wanting to be profitable, but also impactful, whether that's creating a really good ecosystem, a good environment for their tenants, which ultimately makes them want to stay longer, which then increases, impacts the NOI, or it's something like what you're doing, which ultimately gives them the ability to enter into this world where they wouldn't have access before.
Absolutely. And I think that there's no issues with Airbnb. What I'm about to say is that's my preface. There's no issues with what Airbnb has done, but you see now so many large corporations that go in and purchase real estate just to turn around and rent it. And at the end of the day, that corporation is the only corporation that is benefiting truly from the ownership of that asset. Yeah, sure, someone is renting it or it's being Airbnb'd out to people that are touristing. But I can't remember where it was. I think it might have been on LinkedIn. I saw a LinkedIn post of someone that had graffitied a building in Barcelona that said something like, "This Airbnb used to be my home." It's stuff like that where it's like these corporations are buying and renting out real estate, where I think it misses the mark of that heart-centric connection of it's not just an asset that churns out profit. Do we want that at the end of the day? As a finance guy, as a numbers guy, yeah, that's what we want ideally. But why can't we do that in a method and in a way that also helps other people to get out of a situation they're in, that they want to get into something else, or achieve that kind of American dream of home ownership and building equity in something, in an asset that is tangible? I think that is missed in today's marketplace.
In 2010, 11, that was when the market was, people were investing right after the 2008 crash. That was more possible for people who had the access, had the funds to be able to do so. But now I believe like a lot of millennials or Gen Z, they can't get into the market in the same way. It's not available.
Nope. And it's sad to see that, home prices continue to rise, but inflation also rises and income levels aren't rising as fast. And so it's kind of scary and reminiscent a little bit of 2007, 2008. But I think that there are things that can be done to help to kind of level the playing field, because at the end of the day, cash is king, money talks. Not those millennials, Gen Zs don't have all of the funds and access to funds to put a down payment on a house or those types of things. Or maybe they have the funds to put the down payment, but they have a bad credit score for whatever reason, and so they can't qualify. My brother-in-law fits that mold really nicely. He's actually in fashion and design. He's very talented. It's a part of I don't understand it. My brain does not work like that. But he's self-employed. He makes good money, but because it's not W-2 income, it's hard for him to take that to a bank or a lender and get qualified. And so does he have the money for a monthly mortgage? Absolutely. But can he qualify? He can't. And so we're trying to help those types of individuals that for whatever reason can't qualify. We want to provide them with real estate opportunities to build ownership in that asset.
Do you see this kind of model becoming the sustainable long-term access for those who don't have access to home ownership at the time?
That's a great question. I think that this type of marketplace will grow. Absolutely. The traditional mortgage, I would have to fact check myself. I don't even know when it first started, but the traditional mortgage has been around for so long that I think it will always be available, and it is so profitable for lenders and banks and baking those loans into investment vehicles for retirement and things like that. So I think that the traditional mortgage is so ingrained into the fabric of the financial makeup of the United States that it won't ever disappear or be overtaken. But I do think that as millennials and Gen Zs continue to grow up, and even the younger generations, I think we all think maybe a little bit outside of the box. And so I think that the marketplace is ripe for people that are interested in an alternative solution and aren't afraid of an alternative solution.
What about underwriting to mitigate risk? Like, especially with those that maybe don't have a great credit score, how do you do that to protect your investors?
Yeah, great question. So we have an application, I guess you can call it an application process that people apply, and we run credit and we backgrounds and rental history and all of that. That's a pretty traditional standard that we wanted to keep. And then depending on where they sit and what they're looking for, ultimately, that's the most important thing. Is as a buyer, what's most important to you? Is it the monthly payment? Is it the down payment amount? What is kind of your sticking point? And those are just two, obviously, but let's say you come in, you have a lower credit score. You have a lower credit score because you had to file bankruptcy for whatever reason. You have a good job now, but you don't have a ton in the bank. All right, what we're going to do is we're going to take less of a down payment, but we're going to rework your interest rate to maybe be higher than what you would get at a traditional lender. But you don't have to put down, 5, 10, whatever down payment that is scaring you in a traditional mortgage. And so we do those types of things, the give and take. And that's what's nice about it is the flexibility of the market and that type of real estate transaction.
Amazing. So I like that you're doing that to adapt because traditionally it's not very adaptive to the buyer's need, what the circumstances are. Every circumstance and every, just as every snowflake is different, everybody's circumstances and challenges in life are different as well. So I love that you're adapting and being agile, right, to what the needs are of the actual market in order to make it fit and be successful.
Yeah, that's kind of the whole process. It's not just hey, you can only qualify for a 30-year conventional at 3% down. That's what you qualify for. Take it or leave it. This has that, like you said, that flexibility, the adaptability.
Is this only I know you're in Utah, is this only there? Are you looking to roll this out all across the United States or beyond?
Yeah, I mean, each state is different. I know in Utah, it's an addendum to the traditional real estate documents that you would get. And, we would still have title, you would still have those types of things involved to make it a legitimate real estate transaction. You add on a seller financing addendum. There are other states that are harder to do this in, but it is possible in all the states. So yeah, we want to roll it out nationwide. We're in the process right now of really just fine-tuning the model to go out and raise the initial kind of anchor fund and investment, and then we're going to go trial it in a handful of states, and hopefully it goes well and we can just, like you said, repeat it and keep going one to the next.
What's the 2 to 3 year plan?
So 2 to 3 year plan would be to get the initial fund funded, buy some houses, get people into those houses, and I would say that's probably within the next 2 years. Whether, and we only, let's say we raise 2.5 million and we get into 5 homes and we sit on those for maybe a year or two to make sure that the model works, it doesn't break, there's nothing that goes awry, or if things do go awry, we have solutions for them. And in that time, collecting payments and generating profits to then hopefully replicate it and buy more and more and more. And all of this is hopefully funded by the profits and the things that are generated from the rest of the entities within the ecosystem. As the CFO model and the wealth management and the marketing all succeed, and we're helping small businesses stand up and stay up, profit is being pushed into the real estate entity to buy more assets and just continue to build this monster portfolio of real estate. And then, like I said, venture, I would love to have the venture capital arm. There's a beautiful transition of us being ingrained with small businesses that we could raise a small venture capital fund to say, hey, we're in this person's books. We're helping them with their marketing. This is a great business. Let's pump some money into it. And then it hopefully just revolves, all the cash just revolves, buys more assets, invests in small businesses, and really just builds quite a powerhouse, as you said in the intro, of an ecosystem and a platform.
Amazing. It sounds like it's kind of spokes in the wheel, right? All these different
Yeah.
at the core, like what would you say in a few words that core is for you that branches out all those spokes?
It's a tagline that I came up with a couple weeks ago, and it's the Fern ecosystem taking ideas to IPO, where if we can get small businesses into the ecosystem generating profits, those profits will, as you said, be spokes in a wheel. If someone comes into the ecosystem as a CFO client, they need fractional CFO work, I'll be able to say, hey, we have a marketing arm. Would you like to coordinate with them? If a client comes into the marketing arm, marketing can pitch CFO, and these entities will generate profit off one of another, and customers will become very, very sticky. And then as money flows to the bottom line, then pushes over to the more investment driven vehicles like the real estate and like the venture capital to continue to grow and expand our reach, what we're capable of, build a dev team, build an IT arm. And it really, I know that was a lot more than a few words, but like that's kind of the ultimate thought, is taking ideas to IPO and then having that funnel over into investment vehicles. variables.
I love that. I love that you're building it's an ecosystem. With the homes that buyers want to purchase, is there an investment strategy so that the investors that are buying into the fund, that they feel confident that this is a good property to purchase, like that it's not going to have major issues, that long term, perhaps, it's going to have a good increase in value?
Yeah, so the model we're building right now is looking at kind of the breaking up the United States into sectors: northeast, southeast, northwest, southwest, kind of like middle north, middle south, and really kind of find each specific region to fit the ROI that we're trying to generate with each property. And with the purchases, there still will be inspections. There are going to be pieces of that traditional process, like title, like inspections, that you don't want to go away from. The first home I ever bought, we had the inspection done, but we didn't pay extra to camera the main sewage line. And a week after buying our first house, my wife and I think I was 20, 21, 22. I was young. Sewage backed up into the basement. And we had homeowners insurance. It all worked out, but it was a terrible experience. And so now every home I've bought since, I'm like, yeah, pay the extra money, camera the sewage lines, just so it gives me peace of mind. And so I want that peace of mind for our buyers and investors. And so there still will be traditional pieces to have a really secured investment and a really solid property. Because at the end of the day, let's say we have a buyer that maybe flakes or has trouble paying or whatever the case may be. We want the property that sits within that portfolio to be appreciating, so that one of two things can happen. If someone has to move out, we can either fill it with a new buyer, or if it's appreciated enough, you turn it, you sell it, and you flow the profits through to the other entities, to investors and things like that. So there's definitely a lot of due diligence on our part to make sure that we are hedging all of those risks.
Absolutely. Or refinancing and pouring more money into the fund. I love that, because it comes back to the systems and the processes, and also being an advisor for the buyers as well, guiding them through the process, especially if it's the first time they're buying a home. They don't know all the different things to watch out for. They have people maybe whispering in their ear, advice that's not so good, but coming especially from an investment perspective, that it's literally the biggest investment that somebody will make in their lifetime.
Absolutely.
If they don't have the guidance, they could absolutely make horrendous mistakes.
So we want to make it a win-win-win scenario where the buyer wins, the investors win, and the company and the fund win as well, so that everything can just keep turning and churning, and the engine, hopefully, that we build just becomes self-perpetuating. And ideally, right, you want to build a machine like a light switch where you turn it on and you can walk away and it does what it should do. And so we're at the beginning stages. Fern's CFO, the entity I run specifically, has been up for a year. For financial, the wealth side has been around for 3 or 4. And so we're trying to spin up marketing and everything else moving into 26, marketing and tax, as well as this real estate side in 26. And so we have a lot of moving pieces, but if we can buckle down and do it right and build the machine, it really has the potential to be very productive and very lucrative.
Absolutely. What do you see as the biggest play, the biggest next opportunity happening with this crazy market? I think that this is a first time, right? I mean, I know you said it's like echoing of the 2008 crash, but it's kind of unprecedented how everything happened with COVID and how it's, happening with inflation and everything. Tell us what you see in terms of the financial side. What's the next biggest opportunity here?
Great question. I mean, selfishly, I think alternative financing is a huge piece of that. I think that is definitely a play that will become more prevalent in the marketplace. But I think that one thing that can really come into play is, and there's so many variables, and that's what makes it tough, is if rates do come down or continue to come down, or if rates hold, does it become a buyer or seller market again? Is there a little bubble building that's going to burst? And I mean, the people that won in 2007 and 2008 were the people, like you said, that had funds available. Everything went on sale, essentially. And so I think that an opportunity that could be there for the real estate market is for people people with funds to get in as things potentially downturn. But I would want to be one of those people with funds out buying real estate to help other people get into real estate, rather than everything goes on sale and corporations scoop it all up just to keep it, and or start renting at higher rates back to others. Like, it just, that won't lead to anything positive. And so I really think that alternative financing is something that will become more and more prevalent in the marketplace as it becomes more consistent, as well as more well known. People will be less afraid of it. People will become more educated on it, and it'll be an opportunity for people.
Love it. Can you leave our audience maybe with one tip on the buyer side and then one tip on the investor side? What would be like your top tip for them?
From a real estate purchasing perspective, I think what you said makes a lot of sense, in the fact that this is, for most people, their biggest investment as they purchase a home. I would think really, really long term. I think that trying to find a property that suits your current needs as well as your future needs is a way to set yourself up for success in the long run. For example, my wife and I, our first home we ever bought, we turned it into a duplex that had a side entrance. And so I was like, we wanted that one really bad because we knew we could live in the top and rent out the bottom while we lived there. We didn't have any kids at the time. And then as we moved out, we were able to rent top and bottom, and it was a nice little property for us. And so that's what I would say. Think short term and long term, and where to buy and what to buy. From an investment perspective, what's coming to mind and what my gut is saying is kind of goes back to what we've talked about, and that is try and lead with the heart-centric investments. If you are someone that has access to capital and funds, I would implore that person to try and put those things into investments that are going to better the community and better the nation and better people's lives. Because I think that also, while thinking about the bottom line, I'm not saying put money in something that isn't going to profit and benefit you just because it feels good, but put it in something that's going to get you the return you're after. But if you can do that and put it into something that is benefiting others, I think that's, as I hope to become more and more successful and have more capital to invest, that's where I'm headed.
I love that. And that's literally what the whole podcast is for, highlighting people like yourself who are making an impact. ROI is ultimately not just the money we make, but it's the impact. It's on the human capital, right, side of it. And when the human capital is maximized, if you feel good, you can do good. And if you do good, then it's a ripple effect. I love that you're sharing that message here. I do have one last question for you. Something that has come up recently about the 50-year mortgage. What are your thoughts on a financial side of things regarding that?
I had my brother-in-law ask me the same question. I think that it has pros and cons. The pros are that, from a month over month perspective, your payment is less, but I would advise, speaking from like you're saying, in an advisory role, you got to think about the interest. And I think that while a lower monthly payment seems really nice, if it's something you're trying to get into to rent out, or to get into to hold on to it for a really, really long time, it might make sense to take the interest on the chin. Or if you're trying to flip it really quick, buy it, flip it, sell it, that makes sense. But if you're just thinking, oh yeah, this is going to be a home that I'm going to live in forever, and you're only banking on the appreciation of the asset, I think the interest will eat away at that appreciation quite aggressively. And so I think that it can be used properly in certain situations, but the interest scares me. Paying that much interest over 50 years is scary.
Absolutely. Is that something that you would think about rolling in to your fund? That's also another alternative strategy, financing strategy. Is that something that you would play with? Do you see that there would be any benefit, especially from that impact, heart-centered place?
Yeah, I think that, again, the beauty of what we would be able to do would be very, very flexible. And so if you had a buyer specifically interested in something like that, and they were saying, yeah, I want a really long 50-year term, but I'm willing to pay X, Y, or Z in interest, or a heavier down payment or something like that, if they have a specific use case in mind for that home that they're buying, I think it's something that if it's going to bend, again, if it's a win-win-win situation, I don't see a reason why not to do it within what we're building. I could see it being useful.
If the audience would like to reach out to you, how can they do so?
They can reach out. I have an Instagram. It's fern.cfo. You can DM me there. That's probably the best way to get me, is on the socials, or find me on LinkedIn, Mitchell Fowler is my name on LinkedIn. This is the face on my profile. So feel free to contact me there. Always happy to chat and learn more and network and grow everybody.
Amazing. Thank you so much for all your insights, Mitchell. What a pleasure learning about the good that you're wanting to do with a not so good market right now. And from lemon, you've made lemonade. Thank you so much for joining us today.
Of course. Thank you so much. Appreciate it.